let's talk about Saudi Arabia. If I look at Vision 2030, there were some key targets that were set for 2020. And our chief economist, Ziyad Daoud, has run through some of them. FDI, ease of doing business, and global competitiveness. They not only are not making their 2020 targets, but in actual fact, they're going backwards on these. This is a fairly damning indictment of Vision 2030.
I would say it's pretty a bit different from the way you are portraying it.
Okay.
If we look at the non-oil sector, which is, I think, it's the sector to look at, reforms are gradually impacting the progress that this sector is making, and we expect growth in the non-oil sector to gradually grow over time. The ranking of Saudi, or the improvement in the ranking in Saudi in the doing business, was one of the highest in the world in the recent doing business report of the World Bank. Diversifying an economy outside oil, when the oil is very volatile, oil prices are going up and down, is a challenging task. Investing in talent, investing in new opportunities is not something that can be changed overnight. I think the progress that has been made goes in the right direction. Going forward, increasing productivity is going to be important. Opening of some new sectors like leisure tourism has proved to be good for Saudi, as well as also for the other GCC countries, becoming less pro-cyclical, investing in human capital, diversifying the economy, and providing more access to finance to SMEs and the private sector to lead growth is one of the priorities. We're still very low compared to other EMs on that.
Okay, and it's going to take time to deliver those reforms. We've got a pre-budget announcement expected probably this week. Do you see the government revising their budget deficit for 2019? I mean, Saudi's projection is 4.2% of GDP, down from 6.5%. We see it at around 8%.
Look, we need to wait for the budget to be announced. Our recommendation was to gradually, through fiscal consolidation, reduce the level of budget deficit to reach the target that Saudi has set in 2023 to balance the budget. This is the step that could help them gradually de-link fiscal management from the oil cycle. The introduction of some measures last year with the VAT are steps in the right direction to diversify revenues. Shifting more the support to the private sector through measures like support to SMEs through financial inclusion, like investment in infrastructure to open up certain sectors, are the right steps that will allow growth to be gradually up in a sustainable way.
Okay, and can I just pick up on the aspect of growth? Because again, the government here says 2.6% for this year. Everybody else in the market is flat, including the IMF. Again, quite a substantial gap. Why do you think they remain so bullish versus a flat estimate from everybody else?
I think we have to separate between oil and non-oil sector.
Non-oil is growing at the fastest pace since 2015.
Yes. The non-oil sector is dependent on the OPEC Plus agreement. Is the OPEC Plus agreement is going to be extended, or when it will end in March, they will go back to normal production? Where oil price is going to be next year. Therefore, there is a lot of uncertainties related to oil market, oil prices, and therefore it's very difficult to disconnect this with the evolution of the oil sector.
Is your base case scenario that the OPEC Plus agreement is extended?
No, our projections is the OPEC Plus agreement will end.
And that would take Saudi oil production back to where?
Back to the previous capacity. And this is why we are projecting that next year growth will be higher than this year.
I mean, that's contrary to what a lot of people are saying. They expect OPEC Plus to cut again in December and to endure through next year because there's such oversupply.
This has to be announced. Currently, the current announcement today is that the OPEC Plus agreement will end in March.
In terms of the global downturn for trade, this region is perhaps, at most at risk. How is that manifesting itself in terms of the data that you look at?
Trade tension, all the global fractures are affecting the prospect of the region. And we are projecting this year, 2019, that growth will slow down.
Yes.
Of course, there are some country specifics. For example, the decline in growth in Pakistan affected the non-oil countries. On the other hand, the volatility in oil price had an impact on the oil producing. Yet also here we have to separate between GCC, where the slowdown is much less than, for example, the negative growth in Iran.
Can I ask you just one last question on Lebanon? Riyadh Salameh at the Central Bank says we are days away from an economic collapse. Would you share that assessment? Is the IMF ready to step in? Have you been asked?
I think he has clarified that his position after that. What Lebanon needs is a strong package of reform that brings confidence back. First, confidence of citizen in the state, confidence of investor in the economy, and confidence of the donors community in the reform package. And this requires to address the twin deficit, fiscal and external deficit, and also to reignite the economy that has been suffering from very slow growth over the last 5 years.
Do you see any risk to the dollar peg?
The economy, the starting point has to be to address the imbalances and then tackle fiscal and external sector first.
Okay.